Get to the time machine. This is the market update. Welcome to a repeat of 2008 plus a repeat of the year 2000. You can hear it here before you hear it on Bloomberg. We will give it to you simple. We gave it to you yesterday. So make sure you subscribe to the channel if you want to know what all this volatility is about. If you want to know about the Fed's emergency response that is no doubt coming, you want to subscribe to the channel, you want to join Patreon, and you want to become a YouTube member, because coming up next, everybody's favorite genius, Toby Ward, will be dropping the knowledge to help you navigate what TF is going on here. Now, let's begin. So if you stay with this, you're going to learn about all the things that are going on in legacy, and you do need to know what is going on in legacy. Here it is simply. You have a lending problem like 2008. Remember, as a result of 2008, the Bitcoin white paper was written and Bitcoin was born out of that problem. Essentially, that started when people stopped wanting to lend money to each other. And a whole bunch of people defaulted on, say, car loans or RV loans. And when enough people default, that hurts banks. That's why no one wanted to lend to each other. And that turned into a shockwave called contagion. That was essentially the biggest crisis in modern U.S. financial history. Let's put it that way. Now, so this time you have something similar. And sitting on top of that is the dot-com bubble, the internet stock bubble, part deux. The internet stock bubble was from 2000, where you had things going up and up and up, regardless of whether they've had earnings or not, or even revenue. So you have quantum computing companies, nuclear energy companies, artificial intelligence companies, indiscriminately mooning. Like, correct me if I'm wrong, but the stock of Robinhood, not stocks on Robinhood, the stock of Robinhood has 10x'd since August. You've had alt season in stonks, and they are just completely oblivious to this rot that appeared suddenly. Like 2 days ago. Naturally, it's appeared a lot earlier because we are now all finding out what this gold rally is really all about. Gold rallies when people are afraid, and we are now finding what people are afraid of. So if you're on TikTok or don't go anywhere, because I'm going to explain it to you, because you ain't going to understand what Bloomberg and Zero Hedge are telling you. I'm going to explain it to you. I got it last night. This will be take two. Very sweet, very to the point. You'll love it. Then I will explain the reasons why you need to ask yourself, am I a believer in Bitcoin? Do I believe in cryptocurrency? Do I believe in the decentralized ecosystem? When you have this type of price action, altcoins are going to get hurt. Bitcoin's probably going to get hurt. But then Bitcoin, like when you had those bank failures in 2023, crypto could turn around and go straight up, particularly big boy Bitcoin. But they're going to put you to the test first, and you need to engage in basic risk management, because this whole thing got very serious very quickly. Very quickly. So let's begin. This story starts with a crisis of lending dollars. So why would you buy gold? Well, because you're trying to get out of a paper money system, right? And you're like, well, didn't they print too much paper money? Isn't that why gold is going up? Well, actually, no. Is that people on the inside in the financial sector in legacy have been witnessing, apparently for quite some time, people are unwilling to lend to each other. And then when Uncle Sugar, emphasis on sugar, shuts down the government and there's no sugar out there in the economy. There's no spending. There's no dollars floating around. So you have a liquidity crisis, meaning people who need dollars can't get them. Argentina couldn't get dollars. They went to the president and they did a deal. As soon as they got done, because everyone's like, it's Argentina. They always have problems. South Korea called the White House and wanted a deal, meaning they wanted a loan. They can't get money. They can't get dollars. So you're like, well, that's really interesting. Yeah, it's really interesting until you have insolvent banks. So there's a new FTX in town. It's called Jefferies. It's an investment bank. And as it turned out, some guy named JustDario printed out one piece of paper and looked at their assets and liabilities and said, these guys have been surviving on Fed loans because the Fed has been loaning money to all these banks that have obvious problems. Then JustDario finds out that Jefferies took 20% of their customers' money and used it as collateral to get a loan. Well, what happens when their customers find out about that and start pulling their money out? I can tell you what happens. Jefferies becomes the next Lehman Brothers. And then you can go look up what that was. That was one of the things that triggered the gigantic down move in 2008. You also have insurance companies like MassMutual is rumored to have a lot of Jefferies exposure or debt on their books. In other words, if Jefferies has a problem, anybody who lent money to Jefferies has a problem, or anybody who bought securities issued by Jefferies. And that's why it's called contagion, right? If you have a problem, you have one cockroach, you have a million. That's it. And of course, as everybody knows, all the real people that shop at Costco, people have been walking away from credit cards. People have been walking away from car loans. And that can only go on so long before banks fold. The Fed's been keeping all these banks alive for I don't know how long. And then all of a sudden, the stocks of these banks, which of course are up like every other stonk, okay, these stocks of these banks, they vaporize because they might go out of business unless the Fed saves them. Again, nobody wants to loan money to anybody. That is what is happening. They'll give you a huge explanation. That's what's going on. You'll hear terms like subprime lenders. Subprime lenders are people who do loan money that don't have great credit. And these people have been turning in keys. They have been walking away from credit cards. And this has been going on for years. So finally, it's catching up with these guys. And subprime lending was one of the culprits back in 2008. We've made the same mistakes all over again. And like I said, on top of that sits, a completely insane bubble, not in the big stocks, not necessarily in the Magnificent Seven, but you do have stocks in general at the most elevated valuation ever. And that's not really the issue. The issue is you've had alt season, you've had meme season, you've had insanity over there for months, all summer long. Okay. So obviously there's a recipe here for legacy to completely come unglued. Hence the crypto price action, right? And of course, the shutdown and all this trade talk just exacerbates the problem. Ironically, it's just like 1987, which is spooky because I think the anniversary of that is coming up in like 2 or 3 days. All right. I wanted to buy the dip. I'll read to you what our model said. Our model was like, hey, if you get 107 in Bitcoin, or maybe you get like 3,800 to 3,500 in ETH, you definitely want to take that. Okay. Now we're going to test everybody's nerve, including mine, right? This is why you own Bitcoin. If you cannot hold Bitcoin, if Bitcoin does not keep it together or go up when this happens, okay, well, whatever narrative they have around Bitcoin is bunk. Period. But here's a positive story. Here's the good scenario. First of all, There's no way the Fed can let this happen. You have a $7 trillion problem in China that's not related to this. That their does it matter until it does problem is so big, they can't even print their way out of it. It's probably one of the reasons why the orange man is leaning on them. Now, if you have that kind of a problem, there's a Japanese problem. The Fed has been reducing its emergency money supply, meaning people have been drawing emergency money from the Fed. And you may have remembered last week where the Fed goes, hey, we're going to stop tightening now. We're going to stop draining money out of the system. And I said, yeah, note, because you're going to have to start putting money into the system like now. So if everyone needs emergency money, or if the Fed has to absorb Jefferies and insurance companies and all of these guys have to be bailed out, they have to spin up the printer massively. Because I don't see how they can let this happen. They may let the stock market go down, but there's no way they can let the whole system come unglued. Nothing's going to save the speculative junk in equities, but the printing press is going to run massively because they can't let this happen because it's like basically it's all too big to fail. That was the saying back then. Now, obviously, if the Fed has to come in and probably cut rates, because part of my argument about why Powell has been so stubborn to cut rates is because he's been saving it for a day like this, where he has to come in and do like 75 or 100 basis points or do 50 basis points in a, three times in a month to get the market to calm down. He's been saving it for an emergency, and it looks like you might have one. You might have one. Now, as far as crypto goes, again, you have the printer spun up, you have lower rates, and you have a realization in legacy. It's very simple. It's got to do with the ETFs. Now, I guess if everything goes to zero, the Bitcoin and Ethereum ETFs could be affected. However, the only intelligent investment in the stock market right this second is the Bitcoin and Ethereum ETFs, or any stock market product connected to actual cryptocurrency. The asset allocation in this new quarter that is now, 17 days old, nobody has rotated to crypto. Crypto has been radioactive. They haven't touched it. They've been too busy doing whatever they've been having fun time over there while the whole treehouse rots underneath their feet. Seriously. So you bring in the Fed, you bring in asset allocation from BlackRock. Remember how they said that we're going to be doing a lot to expand Bitcoin? BlackRock has customers. We discussed this yesterday. So are you a believer in Bitcoin? Guess what? We're about to test you. There's a Gann situation. It's called Pluto in Aquarius. You will no doubt hear about it. Okay. It's the time of revolution. And when this Pluto in Aquarius event begins, you normally have unbelievable fear. I assume the unbelievable fear was the levered margin baby liquidation in crypto, and it is way bigger than that. And this has got to be what crypto has always been about. Now, will highly speculative coins that have not done well, will it have a hard time short term? Yeah. It's happened with Silicon Valley Bank, right? Bitcoin went down, but then eventually when it was over and the Fed stepped in, Bitcoin went straight up. And I'm assuming that ETH and larger cryptocurrencies can go up as well, because the case for stablecoin and DeFi will explode. That is the best case scenario. The worst case scenario is that we're having an everything crash. That's it, right? Yeah, and you have to decide, right? How much money are you going to keep in cash? Do you have to stop out of stuff? Do you have to rotate it into Bitcoin? I will read to you the tactical plan that I gave Patreon, because we're here, right? They either did it or didn't do it. I entered at 107 yesterday. We'll discuss it. But this, make no mistake, this is why Bitcoin was invented, for a repeat of what happened back then. And honestly, it's a double shot, because you've got all these clueless people in equities who have bought all this ridiculous stuff, Robinhood, banks, everything. This is going to come to a brutal end. And people are going to discover that Bitcoin, down 20% from its high, is truly a revolutionary idea in a world where they have all lost their mind. In fact, you may not be able to have a big enough crash to adjust for the nonsense worldwide, US, Japan, China. The only way to vent the pressure in the system is to take Bitcoin up. At least that's my bet. And as a trader I used to work with used to say, if I'm wrong, I'll lose money. This is not investment advice. This is an opinion show. I'm telling you my opinion about these events in legacy. You know, you will see people lose it. You will, right? Unless the Fed comes directly in. But with the the US shut down, I mean, the Fed can still operate. But to me, all roads lead to Bitcoin. Like if I was worried about my altcoins and I didn't know what to do, I would roll it into Bitcoin. This is not investment advice, right? Because, this is the time where Bitcoin should go down and then go straight back up again and just never stop, right? This is it. This is the Bitcoin Super Bowl. All these guys that talked all this, oh yeah, like Saylor, all these dudes. Oh yeah, I'm a big Bitcoin guy. Yeah, everyone's a big Bitcoin guy when Bitcoin's at 120K. But when they're selling Bitcoin at 104 or 103 and the stock market is falling apart, yeah, now we check. Now we're gonna rubber glove everybody. We're gonna say, okay, do you really like it? Do you believe in it? It's the turning point, right? This is what they built Bitcoin for. One guy is like, buy bullion. I used to buy 1 ounce coins. People are lining up to buy gold. I think people understand in a way what's happening. Gold is the new toilet paper kind of thing. It's interesting to a point because, if they're buying gold because of stress in the lending system, right? The second the Fed comes in and throws a tidal wave full of money at this whole thing, okay, that might cause a parabolic in gold. It might, but it could also cause a parabolic and then a correction. Because once they figure out how to solve this dollar lending problem, the bid could switch from gold to Bitcoin. And I'm not saying gold is going to go down. I'm saying that when the Fed comes in, right, you could have gold stop or gold continue and Bitcoin follow. And in some ways, I feel like saying, you know what? If it's not the everything crash, meaning everything, including Bitcoin, if it's not the everything crash, then it has to be the dawn of Bitcoin. It has to be. And if it's not, well, then we're all drinking bad beer. It's as simple as that. It is as simple as that. Okay. Lee says XRP could replace the system. Okay. Jeremy Saint Germain says everybody needs to listen to what I'm saying. Lee says XRP $15. You know what, dude? Something can happen here that could be insane. Like in 2008, just for reference, if you're interested, right? For reference, if you're interested, the blowups were in special government bonds, housing bonds, subprime lending, banks. It wasn't in the stock market. But what happened was when this unfolded, the only way people could protect themselves inside legacy, the only hedge was to short the most liquid thing out there, which is S&P futures. So by default, when this whole system came unglued, everyone just shorted the stock market. Everyone drove it down. They drove it down 40% because it was just massive panic hedging. It was assumed it was going to be a depression. It wound up being a huge recession. Housing prices crashed. etc., etc. Okay. Now, in this case, they have two choices. They can go short S&P, or they can buy Bitcoin and ETH because they've got ETFs to do that. And they can buy it down 20%. So there's two ways to trade this. And obviously, we will see. But, I think Zion Bank is one bank that's being mentioned. Bloomberg has got a hold of this. And, you'll know it's getting really serious if they reopen the government without one word. If everyone just gets together and goes, oh my God, we have to reopen the government now. Because, someone's going to get briefed on this. The men in black are walking into somebody's office this morning, probably guys from the Fed going, hey, this is not funny anymore. This is not funny anymore. Okay. And again, the dawn of cryptocurrency, the dawn of privacy. This is why Dash has been going up. There may be a conflict or something weird going on overseas, right? In a country that may not be able to get access to dollars. Makes sense, right? I mean, Dash is a popular currency in a country I just don't want to mention, but it's big and it's in Latin America, and we don't like their leader. So the citizens, because of currency problems, mine Dash in their house. So if you want to do business in this country, you can do it through Dash. And the sovereign itself may need to use Dash because they're not using dollars. And even if they did, they can't get a loan. Nobody can get a loan. Uncle Sugar has turned into Uncle Broccoli. No sugar. No sugar. So if the fiscal side is not putting sugar in the system, the Fed has to do it. And if the Fed doesn't do it, you have the everything crash. Or in crypto, you have the everything dip. All right. So let's go to the tactical plan. This is what I gave Patreon. I told them I was pushing it in yesterday. I thought it was the low. And that turned out to not be the case because I found out about MassMutual this morning. Although it's not a total disaster right now to have ETH, Solana, and Bitcoin down 2%. That's actually kind of merciful given the gravity of what's going on, right? So here was our plan, just so you know. This is why you subscribe to Patreon. Again, further guidance from our top clairvoyant analyst coming up right after this. So the fear flush was supposed to be from October 15th to October 17th. Market revisits the wick low. It was kind of like the Gann model called it visiting the shadow of the wick. The shadow of the low is like traveling into the scary zone again one more time. Okay, then you had compression, which was the 18th to the 21st, where the range gets smaller, and then the massive reversal was supposed to occur on the 21st. And again, this is very consistent with like bringing in the Fed, right? Like how long can this kind of stuff go on before they have to come in and just be like, oh, wait a minute. Right. They can't even let, they would be out of their mind. Bessent won't allow this. Bessent will call somebody up and be like, yo, we'll have to take Jefferies and buy the whole bank and calm everybody down. I can't believe they're going to let this go on over the weekend. If they do, all bets are off. Because this is what happened back then. Something happened over the weekend. 87 was the same thing. You had something happen on Friday. Everyone had 2 days to think about it, and they came in Monday and lost their mind. Stock market went down 25%, also known as Black Monday. Now, that will undoubtedly be trending on Twitter starting in the half hour, okay? We're not going to listen to Twitter. We're going to listen to the model, or we're going to listen to some at least rational ideas. Okay. So what the model wanted to do, which, by the way, I followed. I did it personally, so you know. So don't hate me. So for Bitcoin, the model wanted to do 40% of a dip buy at 109.5 on a particular DeMark signal. I won't show you because it's a vertical stream, but got the signal. was at 109.5, filled 40%. Then it went down to like 107.5. You filled another 35% there on Bitcoin. Then it said you either add the final 25%, okay, on a close above 116, or you take the risk and save some of the powder, 20% of the position, for a move to 106 to 104, which we just got for a sweep of the wick lows. So that was the plan. And then if it went below 102, it wanted to exit, or 100, it wanted to exit. That's it. And then in ETH, the expected low was 35.50. That's where, the machine kind of wanted to buy ETH. It's really strange that Bitcoin went to where it was the most scary, but ETH didn't. It's weird. All right. So, I mean, technically speaking, based on this, the model was like, yeah, you can add at 3,500 and 35.50 and 34.60 and add the rest of it if it closed back above 4,100. Okay. The model wanted to buy Solana. Okay. The first piece was at 178. The second piece was at 170. And again, very strange. Bitcoin went to its discount zone on Lux Algo 4-hour charts. These altcoins, they didn't even get close. I mean, they went down, but they didn't go all the way down to the discount zone. So, you didn't get filled in ETH, and you didn't get filled in Solana either. And the worst case scenario in Solana was 158 to 148. Just mind-boggling, right? And then, there's a couple other coins, and Zcash, if you want this, if you want the roadmap for the rest of it, for like Zcash, Bitcoin Cash, and Avalanche, and Tau. Okay, that's in Patreon Platinum. Okay, that's not on free TikTok stream, even though we love our friends on TikTok and YouTube. Salute to you guys rocking, tuning in. You have to accept the idea. You have to accept the idea that it's either the everything crash or it's the everything crypto dip. And then this thing turns around and smokes to the upside, because all the money that comes out of stonks, it's not going into bonds because the sovereigns are irresponsible. That's a good word. The sovereigns are irresponsible. Gold could go up more, I guess. And then everyone has forgotten about Bitcoin. Everyone has forgotten about stable coins. Everyone has forgotten about XRP. Everybody has forgotten that Ethereum follows silver. Everyone has forgotten about it. So could you have the wild, wild west here? Yeah, man, you could. Now, you're undoubtedly going to ask me, what about my altcoin bags? Okay, that's a different conversation. So if your altcoin bags are privacy coins, if your altcoins are like Tau or anything that was leading prior to this mess, or things like Chainlink that should be at 100, or layer ones that the internet runs on, you might be okay. Okay. If you're long absurdly highly speculative stuff outside of, say, layer one's privacy and like that strong DPIN kind of narrative, you're subjected to whatever they do in stonks. Now, here's what you're praying for if you're in altcoins. You're praying that Bitcoin, that there's one final wick low, ETH, Solana, everyone loses their mind, and then Bitcoin goes straight up. That all coins go down with stocks, Bitcoin does not go down, and then Bitcoin goes straight up. If that's what happens, your altcoin bags will likely be okay, because the thing that is hysterical about this, really, is that everybody wanted October. Everybody wanted the fourth quarter rally of their dreams. Does anybody remember this? I was talking 2017. Everybody was talking about up only. Okay, well, this is how you get up only. This is it. I mean, you can sit here and talk about, yeah, it could go down. Oh, we did that. Okay. Now let's drink. So let's have a cup of Kool-Aid. Want to have a cup of Kool-Aid? Let's have a cup of Kool-Aid. Everyone in crypto is out. Leveraged players cannot get any liquidity to get back in. So either you're long and out of money in spot, which is most of us, right? Or you're a levered player and you can't get liquidity. You can't get a loan. You can't get leverage. Exchanges are just like, yeah, we're not doing it. We're not lending you money for 200x leverage. No one will give us credit for that. So levered players cannot get back in. Spot holders don't have any more money. So no one is really long. No, Bitcoiners are maybe long. But what happens if levered players can't get in and, retail is too scared and you have gigantic players like BlackRock and pension funds buying huge amounts of not only spot Bitcoin, but the Bitcoin and Ethereum ETFs? And what happens if they start using derivatives markets to make upside bets? Like I said, remember I told you, you have two choices now. You can short S&P or buy S&P puts, or you can buy call options on Bitcoin. This could happen. This could absolutely happen. So you have this destroyed crypto ecosystem that is susceptible to giant players coming in all at the same time. Meanwhile, there's that ironic twist that all the levered players that would love to get out in front of this thing can't play, right? What goes up? What no one understands, right? What everyone hates, or what no one knows how to buy or no one can buy, right? It goes up only because once everybody figures out how to get credit, they just continue to FOMO in. So on one hand, you could go to 3,500 in ETH or 150 in Solana. That's choice one. Choice two is that you have some sort of wild price action and all of a sudden everybody comes into crypto once the dust settles. Because I can't believe the Fed and the Treasury and all these governments are going to just sit around, because this could spread way quicker than in 2008 because the sovereigns themselves have got problems. Again, the perfect world for Bitcoin. And frankly, if I may say, the perfect world for the decentralized universe. And they're panicking across the board this morning. I mean, they're selling the AIntivirus token, which is going to have a lot of volatility at the end of the month, but there's a snapshot for a privacy coin that's also going to allow you to mint a private stable coins. You think you're going to need privacy when all this is said and done? Like, if there is a crisis, let's do it this way. If there is some kind of crisis, you know what they're going to do? They're going to do what they always do. They're going to take advantage of it. Did you know the Chinese character for crisis is a mixture of the character for danger and opportunity? Don't think that they won't take advantage if you have a systemic shock. Don't think they won't. They will. There is a case for crypto. The issue is, can your bag or your coins, can you survive whatever is most likely going to happen in the stock market or with these banks, right? This type of thing, once it goes, it doesn't go away, right? In other words, Bloomberg just figured it out this morning. Bloomberg and Zero Hedge figured it out this morning. JustDario, you have to follow this guy. Let me get the Twitter handle. I mean, this guy had all this figured out a week ago. By the way, he's a big fan of the AIntivirus project. Just saying. Just saying. I'm going to share it. Let's see. This guy has nailed everything. 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 Like, they were hating on this guy. They were hating on this guy. Hating on him. Like, oh, yeah, you're full of it. It's not true. At Dario CPX. Follow Friday. This guy has had everything. Everything. The shutdown. First, he had gold. Then he had the shutdown, creating a banking crisis. And everyone laughed at him. Laughed at him. It was very simple. I didn't really get what he was saying. It's very simple. There's not enough sugars. There's not enough dollars in the system. And when that happens, you know, the system has kind of a attack. Let's put it that way. You know, that's what's happening. Crypto has already had its event. Crypto is very susceptible to these things. It's also a possibility why crypto went down to begin with, because as soon as the orange man went boo on tariffs, really tariffs maybe had nothing to do with it. Maybe everybody just went, oh my God, that's the straw that broke the camel's back. And everybody pulled their dollars. Everyone pulled their leverage. Said, no more leverage. We're liquidating everybody. This could happen in stocks too. But again. So here's what you have to do. So you're like, okay, Bill, I understand the problem. Now what do I do? Okay. So non-investment advice. These are your choices. 1, if you're a spot player, this is probably a dream. Who knows what they're going to do to this thing on the downside? If you're a dollar cost averager, you're in heaven. Now, if you long Bitcoin, you got to ask yourself, can I tolerate extreme volatility? Can I tolerate something crazy like sub 100? Am I going to panic? Because people are going to get upset here. Trust me. Right? You thought you were upset last week. Wait till these characters and stonks find out what's going to happen to their portfolios. Nobody understands what's happening here. Nobody. The legacy guys are just figuring it out. Never mind the crypto heads. They don't know what's happening. So if you get 99K Bitcoin on some wick, or 35 or 3,400 ETH, or 150 Solana, or $1.99 XRP, whatever, are you going to lose it? Be honest with yourself. Don't lie to yourself. This is a gut check in crypto, period. Now, if you're honest with yourself and you can't handle it, there are a couple of choices. You can start rolling altcoins into Bitcoin and hope that Satoshi was right. Or you can call your accountant, tax loss sell, and then come back in. Because remember what the Gann model wanted. The Gann model wanted to add more, either at 105, 104, is talking Bitcoin, or on a close higher when it's reversing. You don't have to buy the dip. You can buy it on a reclaim. So it was like 116 Bitcoin, 4,100 ETH. No, you can be cautious and then go back in if the market proves itself. Because you know if the market does prove itself, that's going to be BlackRock and all the huge players underneath. And I still think those guys are out there buying everything because you haven't heard one word from any of them. Not the hedge funds, not BlackRock, not Cathie Wood, not even Tom Lee. Nobody. Nobody's saying a word, which either means they're afraid or they're down here just buying everything. In other words, if you're the kind of person that really believes, then you have to ask yourself, am I going to believe and am I going to act? Now, if you don't believe, okay, then adjust your book. That means you can go to Bitcoin or you can go to stable coins, right? Ask yourself the question, can I look at another 30 to 40% drawdown in whatever I have? The answer is no. Bitcoin or stable coins, or ETH or stable coins. Those are your choices. Now, if you're in stonks, okay, well, I can't help you if you're in stonks. If you're in stonks and you haven't taken the money by now, I cannot help you. I cannot help you. The greed in that market is extreme. And we have made no bones about it. Toby has made no bones about it. Coming up on the YouTube member podcast in 5 minutes. Okay, so now if you want the real guidance, you want to see the future, I gave you some choices. If you want to see the future, YouTube member podcast coming up in 15 minutes. We will see you then.